and welcome back to my YouTube channel. My name is Joshi, and I'm a real estate broker based in Toronto and the founder of Anuvision Group. On today's video, I'm welcoming to the channel my friend and colleague, Charlene Ward. Charlene is a mortgage agent based in Toronto. Hey, Charlene, how are you?
Hi, I'm so good. I'm so happy to be here. How are you?
Really doing great and happy to have you on the channel again. I know you've guest featured before, but for any of our viewers that haven't maybe seen some of the previous content, can you tell us a little bit about yourself and your professional background?
Yeah, so I am a mortgage agent here in Toronto. I've been in the mortgage industry for, I'm going to say close to 10 years. I was on the lender side before, and then I decided to become an agent. So I'm pretty much blessed with the best of both worlds in the industry and knowing what both sides expect. And yeah, that's pretty much
Good
everything.
stuff. Well, you're still here 10 years later, so I can just assume that you love it.
Oh, 1000%. It's the relationships that I love, right?
Yeah,
So.
that's amazing.
Yeah.
Awesome. Well, today we wanted to discuss and get your take on fixed versus variable interest rate. It's a question that I get from a lot of clients, first-time home buyers, also people that have had maybe a mortgage for a while and now they're getting a new property. They just want to sort of do their due diligence again. And this is a very, very popular question that I get, especially with the Bank of Canada raising their interest rate and everything kind of being all over the place. So I wanted to talk to you about that. Can you briefly explain the difference between what is a fixed interest rate for a mortgage and what is a variable interest rate?
Yeah, so a fixed rate is essentially you have your rate that stays the same for your full term. So that can be a 2, 3, 4, 5 year term, depending on what you've locked in for. That means that your payments are going to stay the same for the period that you've locked in for. If you're going in for a variable, that means that that can fluctuate according to prime rate. And as we've seen recently, the market. So your payments will go up and down. Now, there are options without like getting too confusing about it, but there are options where, depending on where you go, your payment can be fixed. And at a point in time where your payment is not enough to cover the interest and principal, then what would happen is that your bank would reach out to you to actually make up for that shortfall. But for the most part, with majority of lenders, your payment will fluctuate.
Okay, yeah. So that was the other thing I also wanted to check with you. The other question that we get about variable rates specifically is, does my payment move around? Like if my interest rate goes up, will I go from paying $1,600 mortgage to $1,800, or will just the constitution of the principal versus interest change?
Yeah. So in most cases, it will be the latter. But in some cases, you can have the first option, depending on where you go. I believe TD does that.
Okay. Okay. Good to know. So for a client, let's say a first-time home buyer that doesn't know anything about interest rates and hasn't had a mortgage before, they're just sort of shopping from scratch. What would you advise them in terms of considering a fixed rate versus a variable rate for their mortgage?
Yeah. So just in terms of, is it all right if I go into fixed versus variable, sometime maybe like last year, early last year, year from now? Or
Yeah, yeah. Let's use some examples from previous. Yeah.
because I think it's definitely two different things. So, in terms of if we were looking at it about a year ago,
Yeah.
the number one question that I always ask is, what is your flexibility in terms of your budget, right? Because as we know with variable, or for those who don't know with variable, your penalty is much, much lower, which is why a lot of people tend to go into a variable. It's also very investor friendly. So, a lot of investors love being in that in the event that they have to break their mortgage. So you're typically paying 3 months interest and a discharge fee when you're breaking your mortgage.
Right.
When you are going into a fixed rate, you're looking at about approximately 1 to 2% of whatever the mortgage balance is. So that's like a bit of a just an approximate. So that's typically what you're looking at, which is a drastic difference from 3 months interest.
Yeah.
So that would be last year if I were to have that conversation with my clients and say, if you are considering either or, you can go into either or, and it would just depend on your flexibility in terms of your monthly budget, because there is that chance of your variable rate going up.
Right.
In today's market, of course, a lot of people are leaning towards variable, some fixed, some are still leaning towards fixed, but because variable is in a position where you can break it down the line when fixed rates go down, some people are leaning towards variable, and some people are still leaning towards fixed, but more so variable.
Right. So from my understanding, in terms of variable rate, when you're talking about flexibility, it's both on the monthly, which is, a variable rate. It's possible that your mortgage payments can increase when as the bank rate increases. And the second form of flexibility is how long are you going to be in that home? Like, for example, if you have a fixed 5-year fixed term, you would essentially have to stay there for 5 years. Otherwise, you'd face tens of thousands in penalty from some of my client stories. Yeah, like it's not ideal in certain cases. And that's irrespective of if they're selling or, moving or anything like that, correct?
Yeah, so one conversation that I always have is in terms of their goals, right? Because on average, even if you're not planning for it, a lot of times most people will break their mortgage within the first 3 years
Yeah.
for the most part. But they still like to go into a 5-year fix because to them it's comfortable, right?
Right.
And that's not something I can go around. That's more so their choice.
Yeah.
But for the most part, I always have that conversation like, are you looking to build your family within the next couple years? Are you looking to maybe invest in real estate where maybe you might want to use the equity in your home? Things like that,
Right.
which help us narrow down what would work best for them.
Right. Now, in terms of what the rates actually are, we don't have to quote what's happening right now, but in terms of general trends, do you find that at any given point, the fixed rate at a bank is higher or lower than the variable rate that the bank is offering?
So right now, I would say that it's definitely lower. It's definitely come down, whereas variable has gone up over the last couple of months. And prior to that, it was kind of the opposite. So variable was a bit lower, and then fixed was higher.
Right. So normally from my experience and having done client deals and clients getting mortgages, generally what I've found in the past has been that fixed rates have been higher because that product offers a level of security. There's no, flexibility required on monthly payments. You just whatever you sign up to pay, you pay that for your whole term, whether it's 3 years or 4 or 5 years. So they were generally a little bit higher, and variable because you're taking in that inherent risk was generally a little bit lower, which, as you mentioned, is attractive to investors as well, because if they want to, move or refinance or anything like that. And interesting that you noted that. I was actually going to ask you about that trend has flipped now. Do you have any insight as to why?
Why investors are now going into a fix? Is that what you're
No,
saying?
why fix is now lower than what the variable rate is out there?
So bond yields are starting to go down a little bit, and that's why. So bond yields is what affects fixed rates. So that is sort of what's happening. And in terms of brokers as well, we're having the option now where we're offering like 3 years and 4-year fix as opposed to a 5-year because many people may not necessarily want to lock into that. And we do know that we have some time to go, even though right now I believe inflation is at 4%.
Around
So we're on our way to 2%. We got to really hold on until then, which is going to be next year, more so towards the end of the year or next year. So that's why we're able to offer that flexibility in terms of rates now, as opposed to a 5-year, right?
Yeah, that makes sense. So just while we're on the topic of obviously interest rates, we know that the Bank of Canada has been on this tightening cycle for over 12 months now, since last March they started, and they're still doing it. And most recently they held, but we don't know what's going to happen. What's your take on that and sort of what to expect in the interest rate environment for the rest of the year?
Yeah, it's so funny. I just have to add, it's interesting that you say that because I know it's been 12 months. Obviously, I'm in the industry, but in my mind, I'm like 12 months, it feels like it's been so much longer because
Yeah.
we've been riding the wave with buyers, right? So for me, just my take on it right now, we are anticipating that we are going to be reaching 2% by the end of the year and 3% by like June, summerish. So if we're trending on that scale, based on how things are going right now, we are anticipating that by the end of the year we'll be at 2%, and then we will
Inflation rate, right?
sorry,
Inflation rate will be at that, you're
inflation
saying.
rate.
Okay, yeah.
Yes,
Yeah.
and then we're potentially going to see prime rates have some downward changes where it's going to be
Right.
beneficial for people who are in variable.
Yeah, that makes sense. So in general, if someone's in the market right now that's shopping in this interest rate environment, what would be like your top one or two pieces of advice for them when they're deciding on a mortgage and specifically deciding between fixed and variable rates? What would be your top advice?
Yeah, so my things right now, just because we do understand that we are going to have that long game of like a year of holding out, is what are your goals? So if you're not looking to do anything within the next year or two and you're comfortable locking into a fixed because you don't have that flexibility with your monthly budget because of how everything is right now financially with the economy, then lock into a fixed. But if you do have that flexibility where you are able to get into a variable and have that flexibility monthly, then I would recommend going into a variable, because then you're going to see those benefits pop up next year.
Right, when interest rates overall start trending down.
Exactly. Instead of locking into a 3-year where you're at, like, honestly, the highest we've been at for a very long time.
Yes. Yeah, it's been a long time.
Hasn't it been since probably 2008-ish or before then even?
I think so, because we had super low interest rates, and I've been in real estate also for like 9.5, almost 10 years. So as long as you and I have been in the industry, it's always been a super low interest rate environment, right? And people are like fighting for, I remember with my clients, like, oh, this bank is giving us 1.5%, this one's giving us 1.2%, and these conversations just aren't happening anymore. We're in like the medium single digits, like 4, 5, 6, 7%, and things change, right? And we just have to kind of adapt both our practices and we're right there, skin in the game with our buyers and with our sellers, just navigating all of this with them.
Yeah, and that's, in a way, that's kind of the beauty of it, because of course we don't love when things like this happen, but us as professionals, we learn how to pivot, and we learn how to continue to add value to our buyers and, in your case, sellers. And also, it's just interesting. I just want to note with the market too, is that like a lot of people always, I know you get this all the time, probably, people are like, when is the market going to crash, right? You've been waiting for a long time for that to happen. And it's just interesting how like human psychology works, because people are like, I'm going to wait, I'm going to wait, I'm going to wait. And if they had bought last year where rates were much lower, they would have actually benefited. But now it's almost like it's steady. So people have grown used to how things are, and now they're getting into the market.
Exactly.
But nothing has really changed. You know what I mean?
Yeah. So, I think that's really tough, just because we have that internal demand, and I talk about it all the time. It's people that are here that, millennials that are buying their first homes, now even Gen Z is buying their first homes, people that are doing, natural size up, natural downsize, just family changes, job changes, things like that. And this is all internal demand, right? People that are here. Add to that the immigration that's coming in, a ton of qualified buyers, with great jobs. Oftentimes they have savings, great credit, and all of that. So our buyer pool just keeps expanding, and as well as I do what the inventory is like in
yeah, I know that good old inventory. I know exactly what you're talking about. Yeah, so it's just, I guess the moral of me saying that, the moral of the story is pave your own way, right? Like, don't listen to your friends or your family and what they're doing in real estate. Pave your own way. Yeah,
I agree 100%. And that's probably my number one tip for all of my clients. Do what makes sense for your family and your finances, because no matter how similar you think your case is to someone else, it is vitally different. And obviously you don't know that, because these are not conversations you're having necessarily with everyone that you meet on the street, but you and I, we have the privilege of speaking with families about their finances, understanding what their goals are, understanding where their families are going to go in the next 5 or 10 years, and making those plans with them. So that is truly a privilege. I know you share that sentiment as well, with working with all of your clients.
Yeah, especially because it's finances, so when they trust me, I'm like, thank you for
absolutely. Very thankful for that. Awesome. Well, Charlene, thank you so much for taking the time to talk with me today, and with the audience today about fixed versus variable rate. That was great. Thank you so much.
Of course, I'm so happy to be here. Thank you.
Thanks. And to all of our viewers, if you want to get in touch with Charlene, I will put all of her contact info in the description box below. And if you thought that this video was helpful, please give it a thumbs up and make sure you subscribe to our channel, because I do make new real estate videos every single week. Thank you everyone for watching, and thanks Charlene for being here.
Bye.